Good evening, everyone. This is Brad Matheny. Today is May 1st. It is 8:30 at night in California. Been a very long day. Really appreciate all the wonderful comments. You guys know who I'm talking about. And, I wanted to go over some things and really share, a little bit. I can't tell you everything, obviously, about what I do. And, basically, my saying is I do the research, you make all the trading decisions. And for 25 plus years, what I've been doing is building proprietary modeling systems and building specialized automated trading systems, artificial intelligence systems, high end multi leg trading systems. I mean, I built pretty much every type of system you can think of in some way, shape, or form, even a couple of high frequency systems. But what I really wanted to tell you guys is how my analysis is done. A little bit about how my analysis is done. So, this is the chart that I've been talking to you guys about for a while. I'm going to squeeze this all over and I'm going to put up a text message here. And we're going to go over some basic details. First off, number one, go away. Number one, use the Ment rotational modeling system as a primary directional model. Second, use the Ment custom indexes to attempt to identify, let's call it market fundamentals. And fundamentals in the sense of trending, direction, pausing, valuations. I'll show you some of these in a minute. Number three, use the Ment custom, let's call them tools, trading view, and other tools to try to identify trends, opportunities. And then lastly, we could say use the SPY cycle patterns and then others to attempt to align cycles with analysis outcome. So, this is really kind of the process that I go through every week. Every week, I tell you guys that I go through dozens of charts, right? And what I'm going to do is I'm going to show you some of them. Now, remember the cycles and the patterns and everything that I'm using, the excess phase peak patterns, the cradle patterns, the Fibonacci price theory, the LA wave structures, all of that comes from my 30 plus years of sucking up knowledge. I mean, like I said, I got started in this industry. I got started trading in 1986. Didn't know what the heck I was doing. And in 1989, one of my clients came to me and asked, he had just gotten a book on Japanese candlesticks from an associate of his, and asked if I could help him write a program to identify Japanese candlesticks in 1989. And of course, I looked it over and told him, well, it's all math. That's what computers are designed to do. It's all math. So I basically went, and about 3 weeks later, I had written a prototype charting system. He gave me some data, some historical CSV data. And I built a routine to load the data files and to chart the candlesticks and to provide some basic controls. And I wrote a basic inference engine to find the patterns. And that's how we got started. 3 months later, we were running ads on national TV, the Financial News Network, back in 1989 with a commodity broker friend of ours. And that's how we started the Japanese candlestick forecaster software product. Long and short of it, here I am today. After that product kind of went through its life cycle, I went back to coding, custom programming, and that's where I've learned quite a bit. Over the course of the 30 some years, I've been to dozens of trade shows and speaking events, World Technical Analysis Conference, Canadian Technical Analysis Conference, Futures Magazine conferences, you name it. I've been to Market Technicians Association conferences, Traders World conferences, the ones that they do out in Vegas and Florida. I've been all over. And basically, my claim to fame was Japanese candlesticks, but in reality, I'm a programmer and I'm a researcher. So now, what I do every day to make my decisions and where I'm at with this decision right now, where we're at with the market, you understand that prior to the inauguration, again, let's call it January 21, 2025, the markets were operating at, let's call it 100%, meaning normal. There'd been no change in policy. There'd been no change in spending. There had been no change in pretty much anything. We're clicking right along. There had been no alteration in how the markets were operating at all. Now we have a dramatic change in global economic output and global trade policy that I believe will continue to disrupt the global markets. And again, these are why I believe that this new change in how the global economy is potentially going to work and how it's going to play out over the next 4, 5, 6 months this change presents a wide volatility range where traders need to prepare for, let's just call it extreme price rotation volatility. And that's where I think we're kind of at right now. Even though I'm going to tell you some interesting stuff here in the next 4 or 5 minutes, I'm going to tell you that, this is pretty much what I think we're looking at is volatility and traders. Sometimes my fingers get going. Volatility, VOLATILI. Sometimes my fingers get going faster than my brain. Used to be able to type 145 words a minute back in the old days, not anymore. Okay, long and short of it, let's go over kind of what I do. So the primary system, the Mint rotational modeling system, is a proprietary modeling system that I use on a number of different symbols. I want to show one to you right now, the SPY, which is, where was it? I think it was here. This was the image, my friend Marlene. You know who you are. Love this image, Marlene. Just wanted to share it again. Thank you very much. So here's the Mint rotational modeling system running on another server under a different trading platform. I run it weekly and daily for the different markets that I want. This is the SPY. The daily had gone bearish right over here on the day we started moving into those tariff breakdowns. And you can see we basically went short right at this level, right at the open of this bar. The trigger was at the close of this bar, but it reports at the open of this bar. Now, today, we went long on the Mint rotational modeling system daily chart. And again, I use these two systems in conjunction with one another to determine directional trend. The weekly system provides basically a 25% bias or basing reporting mechanism, meaning it's long. It's still been long. It's been long since 2020. So that's 25% directional. And the daily system represents 75% directional. So when we were long here, 25%, went short here, 75%. That ends up being a net 50% short, net 50% cash. Now we're long, meaning long here daily, long here weekly. Now we're back to 100% long triggers. But throughout this entire time frame, okay, we had moved into bearish trending, and throughout this entire time frame, I was viewing the market as 50% bearish, 50% cash, meaning that we had a bearish dominant type of a trend because of this rotating trend. This is broad investor term type of market analysis. Now, additionally, I use, other technical analysis models. This is the what's called the full spectrum analyzer. You're only looking at about 10% of what it does. These are predictive modeling systems. This is running on a daily chart. It's a couple days ago, so you can see that it's predicting bullish trending, short term and long term moving forward. And again, the meant rotational modeling system being bearish, indicating bullish trending, suggested that we were going to be moving higher. You can see here, this is indicating bullish trending. This is indicating bearish trending short term. This is indicating bullish trending long term. This is indicating bearish trending long term. So we're right now, as we watch this, we're looking at potential bullish, general bullish biasing. And this is basically 7 to 10 days out. And this is 15 to 20 days out, roughly. So this is predictive modeling, AI predictive modeling. Now, on top of these, when I get a directional trend, so for example, the reason why I was predicting that the markets would likely come down into a downward cycle mode, moving down into our May 5th through or May 2nd through 5th low, it comes down to the fact that I'm using these cycle patterns. These are daily and weekly cycle rotation patterns that go along with my traditional SPY cycle patterns to show me where we're going to see strength and weakness in the market, potentially. Now, again, are these 100% accurate? No, I wish they were, but they're not. So I'm starting to put together, at this point, 3 or 4 layers of analysis, trying to make my forward determination. On top of the fact now that I am going to start using these custom indexes. And these custom indexes are what I spend the weekend building for everybody. So now understand that, these custom indexes tell me what's going on. So for example, we have the commodity deflation index, tells me how we're looking at, commodities in relationship to the stock market. We have the market ratio index, which tells me whether or not we're seeing accumulation or depreciation of stock value assets over an extended period of time. You can see this is COVID. You can see this big rally after COVID. This was massive appreciation. This was the actual top in the market in August, September of 2021. Nobody really knows that, but it told me right here that we're devaluing. And then finally, by the time we got into 2022, we started seeing devaluation in the stock market. We saw a couple of blips back up to the upside, nothing like what we had during COVID. And now we've seen this depreciation phase. We're lower. We're actually back below this middle channel. We have more. Like I said, I do all of these charts every weekend. We have the devaluation cycle phase, tells me again, another look at devaluation of US stock market. We have the innovation index, tells me what's going on. These are weekly. We have the accumulation phase index monthly, which tells me trending, which we are still in bearish trending. We'll see how this plays out. We just went into May. This was as of last Friday. We have the US leading index. We have the fear cycle and custom sentiment index. We have the cash flow index. We have the volatility index, which I've highlighted before. I love the volatility index. It's a measure of market breadth and trending. We have the valuations index, another look at valuations and how they're responding. We have the US stock market index and another advanced look at how the stock market is operating from more of a balanced market dynamic. We have the smart cash index, which is global and US markets together. The metals index tells me what gold is doing. The FANGs index tells me what the technology system potentially is doing. The commodity to gold index, the volume ratio index, the valuation trend index is a completely different look at the market as far as, and this is monthly, how we're trending and what we're looking at. You can see the deeper lows here, and moving through this low here, which was our August, September 2023 lows. We have the US to global index. We have the tech ratio index. We have the gold cycle index. We have the global asset index. We have the large cap index. And we have the consumer engagement index. All of these and more, there's even more that I'm not showing you, are part of the weekly work that I do that gives me an idea of how the markets are working. Every single one of these is like a gauge on the dashboard that I use to try to figure out what's going on in the markets. And last week, this is again all subscriber data. Last week, this is what caught my attention. And this is what I told everyone, that this is extreme rotation, extreme volatility. There is nothing in this plot right up here that indicates any trending, any real trending. This is a massive print in the smart money index indicating extreme volatility. Volatility exists up in this area as far as rotation and down in this area. When we stay in this area, this is trending. Okay. So what we're looking at right here, yes, it's all done in TradingView. I've spent a lot of time building these, but this is extreme volatility. And that's why I'm going to tell you right now that no matter how you look at, this is as of last Friday, no matter how you look at what's going on in the market right now, okay, this means until we get back down into trending with some sort of direction over here, however it's going to be, this is extremely volatile price rotation. That's all this is. Now, in a couple of instances, we've had some bottoms off of spikes like this, okay, which we could be moving into some sort of a bottom rotation. But you can see that we've had some rotation where we get a bounce off a low and then break down into lower trending. Same thing here. We move up off this top, bounce off a low, and move down here. Whoops. Off of here and move down here into lower trending. So I'm going to urge you again right now to be aware that my custom indexes, if you look at this before I run out of time, this is saying extreme volatility, extreme rotation. Do not trust trending. Do not trust anything until we get back into the center area. This is extreme. I don't know how to put it. This is not an e-ticket ride. This is like a triple E or quadruple E-ticket ride right now. And again, this is indicating we're in a downward depreciationary cycle. This is indicating we're in, let me get to it, a downward depreciation cycle, this devaluation cycle phase. This is indicating that we are in a bearish trending cycle phase. This is indicating that we've seen a boost of speculative buying over the last 3 weeks, back up here into this September, October kind of range. Really overbought, could very well roll down to the downside. And again, I could go on and on and on, particularly here with the volatility index. This is bearish. Again, really anything above, 12, 13, 14, 15 in this area, this is bullish. Now, when you look here, and I'm running out of time, so I'm going to try to wrap this up. This is bullish up in this area and higher. Down below like 11, 10, 11, 12, that's bearish. Okay, so we're right now in that neutral, go nowhere zone. But again, what I'm trying to show you is how I make my decisions. So as of right now, we have the Mint rotational modeling system turning bullish. To me, that means we have a general bias to the upside. But until these other indexes confirm, we are still in extreme volatility. And that's where I'm going to leave you guys. Right now, I think everything is on the table. I think a lot of rotation is capable. I think we could see the market still move in very wide, sideways, consolidated ranges. And again, this is the work that I do every week to try to make you guys or help you guys out and learn how it works. I'm showing you a lot of proprietary stuff. There's even more. I have adaptive learning models. I have all kinds of stuff that I use to try to make these decisions. I can't show it to you all right now. I just don't have time. But at the same point in time, I move with what the market does. And as of today, the Mint rotational modeling system went back to 100% bullish. That means that we're generally upward trending. The lows that I am predicting, I'm going to drag these all out and show you these lows still play out. They're still valid, but more than likely, now that we've gone back into bullish trending up here, more than likely the May low is going to be probably somewhere around here. So I will mark this here, here, possibly down in this area, possibly up here, possibly down into this area for the June, July low, possibly back up into this area, and then back into the September, October low. So really what you're looking at is a little bit more of this kind of a range, staying in this sideways range, not really getting up above these ultimate high levels back up over here. And remember, we have the ultimate high level right there. So be aware that we're looking at a slightly higher building a base type of a range playing out. But these lows, these cycle bottoms and tops, they're still valid. They don't change. It's not that they're going to change because we go up. It just means instead of going down like this, maybe we go up a little higher through this range, or maybe we go up a little higher through that range. You get the idea? It's just the general bias of the market has changed slightly. It's not overly dramatic until we get up above this level here. Okay, guys, again, really wanted to say thank you. Share a little bit about what I do, how I come to my conclusions, why I'm telling you to be cautious. It's not that I can see clearly into the future, but let's face it, with all the data that I have, with all the information that I have, and with the ability to look into the future here and look into the future here, I can kind of get a feel for what the market's going to do, I think, better than anybody else on the planet. Now, maybe I'm being a little egotistical, but I like to think that I provide research that you can get nowhere else, and that this is extremely valuable research as far as your ability to take it, use it, and trade as you want with it. Okay, guys, that's it for now. Talk to you later.